Last week, we also talked about this spring. There is a spring on Monday, temporary commitment, intraday commitment, and then close above. On Tuesday, there's an attempt to rally. Last Tuesday, we discussed that in order to confirm a shift to the uptrend, we need to see a confirmation above the high of the bar right here. Did we get that? No. That's the advantage of using the price. Although intraday, it have a temporary commitment, but at the end of the day, it closed below. When we look at the end of the day, it closed below means that there is no confirmation. Whenever there is no confirmation, there's no trade, there's no trigger, there's no entry. Suggests that this spring is likely to fail. And this is the failure bar. And then a reversal, break back below, commit below, close below, and then followed by a few more days down day. The first bullish condition that we have is the bullish divergence between the S&P 500 and also the short-term market breadth using the 20-day moving average for the percentage of the stocks. In terms of the price action, how oversold is it? If we look at the down channel, this is quite a well-established down channel. But since this rebound, we got a rebound right here. This is a weak rebound, especially after the failure. We notice that this is very weak. We got the first rally and then we got another leg up. There's an attempt to break above, although there is ultimately a failure like uptrust and then break back down here, going down. This rally did not touch the other end of the down channel, suggests weakness, and that's get confirmation by the failure bar, because before that failure bar, there's still a potential rally from this point. But this bar changed everything, break back down, commit below. And after that, we got a spring right here. This spring shows there is not much aggressive demand, followed by the failure bar. There's follow through to the downside. It bumped into the oversold of the down channel. This is the first time it bumped into the oversold of this down channel, hit the oversold line, followed by shortening of the trust to the downside. There another aspect. First, we look at this down channel. That's definitely oversold. And then second, there's another bullish condition, which shows that the trust to the downside was from here to here and then to here. This bar contains some demand. So there's some form of the stopping action, which is to be confirmed. Yesterday bar shows a confirmation, but overall, I'm looking for a change of character bar, which should look something like this bar. Aiming for big spread bar. But how about this? Is this a bullish momentum bar or the change of character bar? No, not yet. Sometimes it will happen within one day, but sometimes it might take several days in order to initiate a strong rally. There is another sign apart from the shortening of the trust, the downside, with a confirmation here, although the spread doesn't look that bullish. Another thing is it breaks out of this immediate down channel. If we look into this condition, that's classified as the oversold condition, together with the bullish condition as shown in the bullish divergence between the short-term market breadth and also the S&P 500, plus up to the very short-term price action. We got a shortening of the trust, bit of the confirmation. If we take a small position to see whether it will commit to the upside, this could be used as a structure. There is a small structure form. This whole thing right here is the structure that we can lean on. If you look at this magnitude to the upside, like a change of character, we got this and we got this similar magnitude. I'm not impressed with the momentum to the upside. However, if the structure develop and we see a breakout and continuation to the upside either today or tomorrow, means that this is slightly impulsive up wave, retracement, and then seems like we got some form of the breakout is happening. If we can see a follow through to the upside, breakout, then likely it's going to go up to challenge a next resistance level. That's the smaller time frame, at least the hourly time frame that I will be using. You can tweak it to 15 minutes or even 3 minutes or 5 minutes, but hourly time frame is the time frame that you should go for if you would like to bet on the upside targets or the upswing. If this develop breakout happen, then you can expect resistance level right here, and then going into this level, it's about 4280. Here should be the strong resistance level. It's about 4280. That should form another resistance level if we take a look at this middle of the down channel. That's the first level that we can expect, provided that there's a follow through to the upside for either tonight or tomorrow. Else, we might need to wait until the FOMC. That should be the market mover. Either we see a strong movement to the upside or some choppy movement to go down and then to form another structure. But short term, that is very oversold and slightly to have a relief rally. That's the setup that we can anticipate for the S&P 500. If you look at the Dow channel, as long as it's still traveling within the Dow channel, is still a Dow trend until that it could break out from here, something like this, because there is increasing of the supply. There's definitely need to be tested. I expect some form of the volatility involved. Even if we get this sort of the ready, I expect another test. Either way, we need to look at this channel. As long as it's still contained within the Dow channel, it's still the pullback or the correction. Most importantly, majority of the setup still not looking good, and we can hardly see many bullish setup. In fact, added in about 4 or 5 stocks for this week. Although that looks good, and overall you could have less than just a dozen of the setup. Not a healthy environment. This is very difficult to trade, whether it's to the upside or downside. Because if you trade to the upside, the choppy movement or the volatile markets will likely to stop out. And if you like to short the market, most likely it's too late unless you short right at the failure bar. Right now it's deeply oversold, not good for shorting, especially if you look at the breadth. The sentiment is just too bearish, not good to join in the crowded trade. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.